It's time to do business. This is Business Incorporated, and we have 55 minutes to go around the world of business. Here's what we have prepared for you. Ongoing in Ethiopia is the United Nations Food System Summit. Nigeria's Vice President is there too. And in Egypt, there's a delay in the refinery project, unfortunately. And Turkey export to Africa hits an all-time high. We'll give you the details on the program. You're welcome. I'm Ini John Mekwa. Let's start business from the global space. Oil prices rose on Monday after the U.S. reached a trade deal with the European Union and may extend a tariff pause with China, reducing concerns that potentially higher levies would limit economic activity and impact fuel demand. So we see the numbers for this afternoon. It's very green, better than it was in the morning. So in the morning, it was just about 0.8% in the green, but now it's more than 1% for Brent, but we're still under $70, $69.28 a barrel. WTI is also up about the same percentage. Price is at $65.97 a barrel. Trade deal and a possible extension in the U.S.-China tariff pause, those are supporting global financial markets and oil prices. And then the United States and European Union, they struck a framework trade agreement on Sunday, and that will impose a 15% import tariff on most EU goods, half the threatened rate. The deal averted a bigger trade war between two allies that account for almost a third of global trade and could crimp fuel demand. And here in Nigeria, 11 electricity distribution companies owe combined 2.7 trillion naira debts, and this is according to a report by the Nigerian Electricity Regulatory Commission. The liability, according to the power industry regulator, is in the form of taxes, trade and payable debts and others. The report, however, says that the discos have a combined asset of 3.61 trillion naira. The report, which was signed by NERC's Vice Chairman Musili Hosseini and Commissioner Legal, Licensing and Compliance Daffy Akpeneye, on July 25, is an order for the discos to demarcate their assets along states to ease the regulatory functions of the states when they enact the 2023 Electricity Act. Let's stay on power for now and have this conversation, well, not just on electricity, but I guess we would also go to the oil and gas, the issue of crude also topping the list. But let's do this conversation with a petroleum economist. Mr. Lucky Goyota joins us virtually from where. Mr. Goyota, good afternoon and welcome to the program.
Yeah, good afternoon. Thank you for having me.
Good to have you. So we hear deaths, we hear intervention from the president. He had said he would intervene because of some of these deaths. But what does all of this tell us about the sustainability of our energy sector in the country?
Yeah, thank you. The energy talk in Nigeria is becoming obviously paradoxical because Nigeria cannot be an endowment of enough energy reserve as we have in gas of over 200 trillion cubic feet of gas embedded in our soil, with over 37 billion barrels of oil reserved here for tap. So when we're talking about issues pertaining to energy sustainability, energy accessibility, and environmental sustainability around the energy trilemma issues, it's worrisome that Nigeria still have this deficit and array of issues to grapple with. Having said that, it is what it is. This is Nigeria for you. It's a work in progress. The interventions that have been made by government in the electricity sector, you know, we entered this year with over 2.4 trillion naira debt owed the discos. And that is a very big challenge for any business entity. We are all shouting of energy poverty. As we already know, the numbers are not too good. Numbers don't actually lie, even though I try to query some data coming from our space here, given the parameters at which those numbers are generated and put forward. But be that as it may, the World Bank had said that over 90 million Nigerians go to bed. That's about 45% of our population. Given the 220 million people that is being considered that we have, that 90 million people go to bed without electricity, predominantly from our rural area. So it's challenging, it's a daunting task to face, but it's something that some of us have devoted our lives on, and we must learn to also understand that it's a work in progress, even though we have our misgivings around how government is handling the situation around every sector, not just the energy sector. We gradually pull through if all else, especially the private sector, is incorporated fully, given the signing on of the Energy Act 2023 that President Bola Ahmed Tinubu signed, considering the privatization that was done, even though done haphazardly, that saw the resignation of Professor Bartinaji there. I think in all of these whole things, the energy value chain is still a huge market in Nigeria. It's a big industry that if we can get our hearts right, it's going to definitely turn things around for economy and also creating jobs for our people.
So, but you know, the issue of debt, doesn't it point to perhaps the possibility of, you know, we always talk about cost-effective tariffs and all that. Doesn't it point towards that way? Perhaps we haven't gotten there yet, and we still have subsidy on electricity even as we speak.
Yes, subsidizing energy is for actually rich country. Some of us are already arguing that on what basis are we subsidizing energy? Energy, we cannot be subsidizing energy for luxurious living. Energy is supposed to be subsidized for the very, very poor people, especially those in my community, say for instance, Elume or Sapele or Ogulaha, where I was born. Look, people there are predominantly poor. You cannot be subsidizing energy for somebody living in Lekki or somebody living in Asokoro or Maitama. You know, you are just wasting resources. Look, energy is a capital-intensive business. To generate 1 kilowatt of power, do you know how much it costs? To generate 1 barrel of oil, do you know how much it costs that you are going to be gifting it by way of subsidy? For us, we are believing that the subsidy of things, especially energy, should be looked into carefully and reviewed. Like when they took out subsidy of petrol subsidy, you could see how much the government have been able to generate to pump into other sectors, even though not being used exactly like as been expected. Governors now have more money in their coffers to spend for development of their state and also take care of their people's prosperity. So if you are talking about subsidizing, I saw the Enugu state government a few days ago crashing down tariffs for power that the band A, band B people should all have some 70, 80 naira discount that the state government is going to be paying, I don't know. While we canvass that state government should have their own electricity regulatory commission like we have in NEC at the federal level and Nigerian Electricity Regulatory Commission, it is not to use for, it is not to be used for politics. We've got to encourage those in the energy generation, energy distribution business so that they can stay in business. Or yet, energy theft is a very big issue in our country. People are consuming power without paying for power. I'm not making case for the intermittent power supply that we're experiencing. I'm making case for business people in the power sector, in the energy sector, also in the oil and gas sector. like what you see every day in the news where you hear of oil theft and the consequences. People don't even try to measure it. It's having a toll on not just the national pulse, it's also having a toll on the decisions of the operators in the oil and gas sector. Most of them are beginning to review their decision and investment position in our space. That's why most of them are, if I'm permitted to use the word from our local parlance, are jackpine to deep sea. You know, oil securitization, even though the NMPC have done its best through the oil and gas or energy securitization, if you like, even though the NMPC is doing its best in the oil and gas sector by way of recruiting oil consultancy firms like PINL, Tantita, and what have you, to secure those pipes for optimality in production and export of our crude. If you notice, if you follow the news carefully, last month they recorded something very huge in the month of June, where has been produced, they recorded 100% transfer of crude from production sources to outlet sources, which is very good. We can also achieve that the electricity sector if people that are responsible do the right things.
So talking about oil and gas now, the NUPRC had said that between 2002 and 2025, about 353 million barrels of crude oil were stolen from Nigeria's Niger Delta. You seem to believe that we are making progress, talking about curbing oil theft. How much more do you think should be done, when it comes to dealing with oil theft? Because now we see Nigeria being a net importer of crude, which is a sad one for a country that's supposed to be a major oil producer. And it's all plays on vandalism and oil theft, and some people have said if the community would cooperate, then this issue of oil theft could be a thing of the past.
Yeah, thank you. Talking about oil theft, like I said a while ago, last month, because the NNPC is doing something nice with PINL and others, around this securitization issue, you notice that we are beginning to drift away from the past. From 2002 to 2025 that you mentioned, that oil theft have been on the rise. You didn't actually take note of what has been happening in the last 3 years, going to 3 years now, the securitization policy of the pipeline assets came on board. Now, more needs to be done because it's not going to be, it's not just a sprint. It has to be a marathon. The PIA Act also embeds situations where communities need to be properly carried along by way of their 3% stake, and also them also taking responsibility wherever and whenever these assets are illegally tapped on. Now, but again, some of the IOCs or even the local oil companies are not doing well in kind communities around, specifically the one that is being managed around Sapele axis, Seplat. Around the kingdoms, and also the coast community is very key. I think that people are beginning to call for a review of the PIA Act because there's some kind of anomaly there that, or let me not use the word, there's some kind of ambiguity there that did not actually spell out things. So some of these companies are taking advantage to misinterpret. So these things have got to be checked properly. A proper implementation of the PIA Act will also help to curb oil theft. If you would agree with me, that document is a very elaborate document. One of my senior professors, Professor Wumi Leder, an authority in the energy economics in Nigeria, made very serious input in that document. So I want to believe that document, if properly politically willed to succeed, should be able to address some of the issues in the oil and gas sector.
Yeah, but this change and adjustment you're asking for? Is the community pushing for it? Who's supposed to be pushing for it?
Stakeholders generally, stakeholders in the business, government, private sector, community people have got to pushing for it. That's why some of us in our little way, wherever we have the opportunity, we'll be canvassing for these things. Government should listen. Government should listen, and stakeholders should listen, and National Assembly especially, who are responsible for lawmaking in this country, should also listen and act accordingly. This era of transactionalism of things have got to end. People have got to begin to transform. We have no other country. These are only countries. Nigeria is, yes, it's an investment opportunistic country that people can come and take advantage of if we properly position ourselves. Africa is the world investment destination. Europe is developed. North America is developed. And in Africa, Nigeria is the centerpiece. If we can get things right here, people that have left the country. I was watching a program a while ago in one of the sister stations that they call the bridge, the diaspora bridge. A lot of Nigerians in diaspora, professionals in the energy sector, health sector, educational sector, they're all trying to come back and give back to the country. But we've got to create that space. We've got to create that enabling environment for people to come and give back to their country. Because most of these guys were trained and raised here. Some had their first degree, had primary, secondary education here. Some people had second degree here. They only left the country because of the situation of things. And more people are going to leave if not checked. Let's do the right things and get our countries fixed.
All right. Thank you so much, petroleum economist Lucky Goyuta, for your admonition and your perspective.
Thank you very much. Thank you for having me.
All right, let's leave the oil and gas and energy sector generally and go to metals. Gold prices fell to their lowest level in nearly 2 weeks on Monday as the framework trade agreement between the United States and European Union ahead of the August 1st tariff deadline boosted appetite for risk assets. And so we see mixed color for this afternoon. Spot gold is down 0.1%. The price is at $3,332. 18 cents per ounce. U.S. gold is on the flip side, 0.2% in the green, $3,336.20. Spot silver takes us down again, 0.33% in the red, $38.24. Platinum, 2.24% in the green. Very big move there, $1,445.50. Palladium follows suit, $1,238 for palladium per ounce. And of course, we know driving this is that agreement between the United States and the European Union that was agreed on Sunday is 15%, and it's a framework trade agreement between both big economies. Back here in Nigeria, the founder of Dangote Group, Mr. Aliko Dangote, has asked the federal government to replicate the successful Naira for crude model across other sectors of the economy. He made the remarks other weekend during a high-profile visit by the Minister of Industry, Trade and Investment, Ms. Jumoke Oduwole, to the $20 billion Dangote Petroleum Refinery and Petrochemicals and Dangote Fertilizer Limited. All of them in Ibeju, Lekki. Describing the policy as a bold and transformative move, Mr. Dangote says that the initiative is already restoring investors' confidence and stabilizing Nigeria's business environment. He also mentions that the policy has already had a stabilizing effect on the Naira to dollar exchange rate, which has experienced less volatility in recent weeks and has created a more predictable environment for business operations. Meanwhile, away from the oil and gas as well as energy area now, ethical investing remains profitable for willing investors, and that's despite concerns over the interest rate and yield environment. This is according to the Managing Director of Free-Invest West Africa, Mr. Ike Chioke. He was speaking during Business Morning earlier today with Laddie Williams, and he highlights some of the benefits that can be derived from Sharia capital investments.
But for the person that is Sharia, is looking at investments from Sharia principles, the option could be either very, very low returns or a higher return based on what the basket now is able to offer. If you look at the last Sukuk bond, it priced around 19.5%. And if you are keeping your money in, say, a Sharia-compliant bank, and you are earning 3% or 5%, definitely buying the bond is a whole lot better, you understand? So our Halal fund is designed to track the 10-year Sukuk bond of the FGN, and the last issuance of 10 years was about 2 years ago. That's the 2023 issuance, and that was 15.75%. Obviously, interest rates go up. 7-year Sukuk that issued in May is priced about 200 basis points higher, actually 400 basis points higher than the 10-year that was issued in 2023. But as interest rates come down, you would expect that rates would also trend downward. But from the context, from the point of view of investors, it's either I have zero or I have a whole lot more.
Right.
And it's good to create that opportunity for faith-based investors.
Welcome back. It's still Business Incorporated here on Channels Television. Let's get intraday numbers now with Anite Edet. Anite, you're welcome to the program.
Yeah, happy final week of July. It's been a stretch, a 5-week stretch. And of course, the markets so far is the best so far within the last 3 months that we've been tracking the record highs. And the record highs have also been within the last 4 weeks, to be precise.
Okay.
Okay, so now take a look at the board there. We saw that we started this, I don't want to know whether I should call it a bull or a behemoth rally, but the market has been climbing all the way from 100, 120, 130, 132, and now ended Friday 134 and still climbing. Remember that we told you first beforehand that the market, we expect that the market will be closing the year at 150, but that's still a little bit far away. But at intraday, we see the market up by 0.12%, 134,616.20 for the Nigerian stock markets, and this is coming at a time when the companies are also releasing their second quarter and first half of the year 2025 results, which seems to be impressive. And speaking of those earnings, we see that the likes of Dangote Cement, Boa Cement, Royal Exchange, and so many others are reporting their earnings for that period, and more to come, which will also add some salt to the market, giving the market much more flavor, better flavor. So most likely this number will climb higher. And let's not forget that financial derivatives company, that's FDC, has projected that for the month of August that the market will be up by about 2%, but that's still some few days away. We have about 96 hours remaining, or just about 4 days remaining for the month of July to come to an end. So that's for Nigeria stock market. And for the Johannesburg Stock Exchange, we see at some point it had crossed the 100,000 points, almost trying to follow Nigeria's stock markets, the footstep. But that it lost that number, it lost that magic number sometime on Friday. But for the intraday market numbers for Monday, it's still in the green, 0.13%, the last track there, 99,043.69 for that market there. And for the other markets, we have only one red there, which is for the EGX there, down by 0.86%, 34,256.44 for the Egyptian Stock Exchange All-Share Index at intraday. While for the close of Friday's trading session, we see the Nairobi Stock Exchange All-Share Index up by 0.19%, 160.50. So this is, when you take a look, all the numbers here, it's only this that has just about the hundreds, but these are in the thousands and so far. But when you take a look at the markets, it's all in the positive territory and most likely going to end the month of July on the upbeat. So that's a wrap on the market. But what is the market, the financial market? What are we to expect for the financial market? First of all, we have it here that the Debt Management Office that normally carries out that monthly bond auction. So the July bond auction is currently in session, and the DMO is targeting about 100 billion naira worth of maturities. They're reopenings actually. So that's on 2 debt instruments there. That's for the DMO. And then the outcome of that bond auction is what is expected to influence the yield direction in the bonds market space. And for the Treasury bills markets, we also see that bullish sentiment is expected. And that's because of the liquid financial system. There's so much liquidity in the treasury bills market. For the money market, the central bank, as we speak now, they've carried out an OMO auction, but the market will be awaiting the results of that, and we'll be having our guests to talk more about that. And for the equities market, which you just mentioned, we're expecting more second quarter and first half of the year earnings results to drive the performance higher. So that means that we're going to see this market come from the current level that we have here on the screen and into something higher, and then most likely ending the month of July, which, as at last week, was 12.1%. So most likely we might see maybe about a 13% month to date and more than 30% year to date for the market performance. So that's a wrap on the market and the financial market outlook for the week. For the week. So now let's talk more about the financial markets, and then this time the fixed income market. And we're going to be focusing first on the bond auction as well as other latest developments within the market. And we have Emmanuel Orji, fixed income dealer with Access Bank, to give us details about that. Thank you for joining us, Emmanuel.
Thanks for having me.
Okay, so now let's dive straight into the current what's happening currently at the fixed income market. Can you give us details about the bond auction, the latest bond auction? How are investors reacting to this latest offering by the Debt Management Office?
I think, like you said, the bond auction is currently going on, the bond auction for the month of July. They have been a little bit tweaked there, unlike the calendar that stated that the DMO will be offering just 100 billion. But the circular that came out last week showed that they reduced that offer to 80 billion, 20 billion on the 2029 bond, and 60 billion on the 2032 bond. So far, we've been seeing some strong demand on that auction, particularly given that significant reduction in size, coming from where we were, where the DMO were offering 450 billion per month, and now they have drastically reduced that to 80 billion. Given that significant reduction, we're going to see some aggressive bids, seeing bids as low as 15% for the 2032 bond. Just to give a bit of context to that, at the June bond auction, that same 2032 bond closed at 17.95. So just seeing how that most significant decline that we were seeing in the fixed income market, particularly in the bond space, on the back of reduced supply by the DMO.
Okay, so now, Emmanuel, so let's move a little bit away from the bond auction and focus on the fixed income market in general. Last week we saw that the Central Bank of Nigeria's MPC, I don't know, I would call it a dovish, hawkish stance, because they've held interest rates for about 3 consecutive times this year at about 27.5%. So how is that impacting the yield environment this week?
I think for the treasury bills market, we've seen yields remain sticky. Post the last NCB auction, we haven't seen that usual sharp decline in yields that we'll see, because it seems like markets are looking for alternatives to treasury bills. Because at the end of the day, if you purchase 1-year treasury bills at roughly 15.5%, the effective yield around that is 19%, and you end up seeing that some money markets instruments offered by banks and asset management are roughly at 20%. So we're beginning to see that appetite decline in the NTB space, given the fact that there's now alternatives to cash than investing in treasury bill space. So until we see that policy direction where the CBN either cuts rates or tighten the aspiring corridor, we'll most likely to see some resistance around this 15% handle, given that there are now more alternatives to cash. I think for the bond space, most likely continue to see that rally. What have really driven that rally in the bond space has been the reduced supply, like I mentioned, by the DMO. But nevertheless, it also gets to a point where investors are now a bit wary of where yields are coming from. Beginning of this year, we're roughly 21%, and now we are 16% handle. That's quite a significant drop for investors. So I think when we start to see some alignment, particularly from the monetary policy side, to actually show that, okay, yes, rates, interest rate environments, because it seems that there seems to be misalignment between where the market is trading and what the CBN is doing. Like I said, The NPR is still at 27.5, while markets already trading at 15%, 16% handle. So before we see any further widening of that spread between the NPR and where market is, the CBN would have to, move market lower. But for now, market is a bit sticky at this point. But for the bond auction, for the bond market, it depends on what, like I said, what the auction prints at. That will most likely to take sentiment moving forward. But for now, for the treasuries markets, the reaction has been muted post MPC.
I'm sure investors are really looking out for that, and the fixed income market, the equities market has actually taken the shine off the fixed income market at the moment. But we do hope that shine will return to the fixed income market as we round off the month of July. Thank you so much for your time on the show.
Thank you. Thank you for having me.
Okay, so now let's leave the fixed income market and the financial markets and Nigeria's, the African continent, into the Middle East. Flying over there, we see that the UAE stocks are actually the ones being in the green at intraday, but the other markets within the region, that's the Saudi Arabia and the Qatari Stock Exchange, are in the red. So the Dubai here up 0.74% and Abu Dhabi up 0.16%, as you can see on the board there. Now let's take a look at the other sides of the market. We see Saudi Arabia in the red, Qatar also in the red. And speaking of Saudi Arabia, we see that Saudi Arabia, the country is announcing that it could hike the. It's actually reporting some earnings season, and several blue chip stocks are trading their ex-dividend partially to offset the optimism surrounding global trade outlook. So Saudi Arabia is not doing pretty well at the moment. We can have that on the screen there. So the market is actually in the red. So now let's, before we have just about some few seconds before we close the market, let's take a look at U.S. markets there. We see that U.S. markets are actually in the green. The stock futures there up by 0.17%, S&P 500 0.26%, and NASDAQ 0.45%. And speaking of this market, we're having is kind of a heavy data week, because we have, first of all, 2 out of the Magnificent 7. If you can have that on the screen there, we have the likes of Meta and first of all, starting from Visa, which will be on Tuesday, will be releasing its earnings. Microsoft and Meta, that's going to be on Wednesday. Berkshire Hathaway, that'll be on Thursday. And Exxon will be releasing its results on Friday. We also have quite a number of economic reports coming out of the U.S., as well as the impact of the trade tariff agreement that they had with, on one side with China and recently with the EU. So, that's a wrap on the market, and we hope for the greens to continue into the domestic stock market.
Yeah, we certainly do hope that, Anita. Thank you so much for that.
Pleasure.
All right, so I'm talking about agreements. We know that over the weekend, the EU and US, they had that agreement, and of course, it's big news in Europe at this time. I think before we head to Chip on there to give us the details of that, however, let's see some other things happening right here in Africa, and that will be with the issue of insecurity and assessment. Data assessments has shown that, well, there's been a reduction in some of those incidents, insecurity incidents, but the private sector is also challenging the public sector that more should be done. The issue of adopting AI and technology is top on the list. That's what experts in the room had this meeting, and that's what they shared with some Nigerians.
There's a lot of security challenges in this country. Over the last 2 days, we spent the time at SASCON just talking about security challenges in the African continent. When we talk about security services, we're talking about trust and partnerships. How do we make it effective and efficient for you and your people? Also, security technology is an important part of what we're going to do in this country, because fiscal security cannot be efficiently and effectively effective if there's no security systems attached to it. That's why security technology is a very important part of what we're going to be doing.
And closely related to that is food security, especially for the continent of Africa. And I guess that's why the United Nations is holding a food system summit in Ethiopia. Ethiopia and Italy are co-hosting that United Nations Food System Summit in Addis Ababa. This is the second summit since its establishment in 2021. The event is going to be between 27th to 29, and Italian Prime Minister arrived there yesterday, as well as Nigeria's Vice President. Several heads of state from other African countries are there, including from Kenya and Somalia. They are all there. And some of the things that have happened there is that the Nigerian government has presented Ethiopia with 2,000 cashew seedlings and 100,000 cashew seeds. The donation, they say, is sufficient to cultivate approximately 600 hectares of land. It was received by Ethiopia's Minister of State for Agriculture as part of a shared commitment between both nations to sustainable agricultural development across the continent. The exchange builds on Ethiopia's earlier donation of 2,000 hacks of avocado seedlings and 2,000 coffee seedlings to Nigeria. That happened in June this year. The initiative aligns with President Bola Tinubu's agricultural transformation agenda and highlights Nigeria's commitment to green revolution diplomacy as a tool for strengthening diplomatic ties while addressing food security challenges. And still in Africa, Turkey's export to Africa edged closer to $10 billion in the first 6 months of 2025. This is according to data from the Turkish Exporters Assembly, with Morocco emerging as the top recipient. Morocco imported $1.8 billion worth of Turkish goods in January to June, leading the continent as improvement in bilateral relations, and Turkey's proximity continued to boost trade. Egypt followed with $1.6 billion imports, while Libya received a $1.3 billion. And other markets include Tunisia and South Africa, with Nigeria at $242.3 million. All right, now let's head to Europe, where Chip has joined us now. Chip, good afternoon. I must say it was a good weekend for you, having that trade deal with the United States. But before we head to that, what are investors doing intraday?
Well, European shares are trading actually mixed today. The Euro Stock 600 is up around 0.3%, and the DAX is down about 0.1%. But they are off their earlier highs. Initially, of course, investors were cheering that news, and basically they have welcomed the news that there is this agreement, because it does remove a lot of uncertainty for European markets. So overall, they have welcomed the news, because of course we do know now that the tariffs will be lower than were thought. We do know that at the end of May, US President Trump had warned that those tariffs could be as high as 30%, but now, of course, there will be half of that at 15%, which is why we did see markets respond with trading higher earlier in the day, and even the DAX was trading higher in the day, but it has moved to below 0% now, because, of course, there are also some fears about the level of the tariffs. The German industry lobby has warned that overall the tariffs will be quite harmful, actually, to German industry.
Yeah, so I guess it's mixed feelings. I thought it would be all jubilation, you know, with the 15% coming from 30%.
Yes, I mean, there is definitely a mixed reaction, obviously, because when you look at, for instance, Friedrich Merz, the German chancellor, he has said that while this is good news, the agreement, the deal, does not carve out some of the does not take out as many restrictions as they were initially hoping. So even though this news is being welcomed across the continent, there is this feeling that the European Union officials didn't do enough to get the kind of deal that would have been welcomed by the continent as well. And it feels like they made too many they compromise way too much, and the United States may actually be getting more out of this deal than the European Union. It's not just the fact that US goods will have zero tariffs in Europe that is the problem, and then on the other hand, of course, European exports to the United States having 15% tariffs. It's also the fact that the United States is expecting, or Europe has actually, the EU has agreed to spend more on buying American energy, around hundreds of billions of dollars in energy purchases. And it's not just that, of course, the EU has also agreed to invest more in the United States, more than it has, and those also are investments that will amount to billions of dollars. So there's a lot of concessions that the European Union has had to make, and that is what is giving people here the feeling that this deal had just been overall not good enough for the European continent.
Yeah, sadly so, because it does sound like the US really has more to gain. And I'm sure each country on the bloc would be measuring how this will affect their economy.
For sure, Ini, of course, each country will be measuring that. For Germany, there was a bit of initially some relief for the auto industry. It is worth obviously considering that the auto industry had higher tariffs since April, so the beginning of April when those, when it was Liberation Day and those tariffs were announced, and the auto industry faced tariffs of up to 25%. And now, of course, that will go down to 15%. So that is somewhat welcome news, but of course, it doesn't get rid of the fact that basically it's more expensive for even the auto industry to export to the United States than it was, say, last year at this time. So that industry will have to, of course, make up for these losses one way or the other, or find other places to do its business. And it's not, of course, just the auto industry. Other industries, of course, had 10% tariffs in those reciprocal tariffs that went into effect April 1st, and now they will have tariffs that are 5% higher. The other reason this deal is so disappointing in the EU is the fact that compared to the deal that the UK got, the UK has 10% tariffs in its deal with the United States. So the EU has 5% percentage points higher for its exports to the United States. So overall, there is this feeling that EU officials didn't do enough to get a deal that was similar to, for instance, the one that the UK got. And essentially, the European Union has gotten the short end of this deal. So we will have to really watch out what happens now with the fact that the EU member states will have to approve this deal. Of course, overall, there is the expectation that they will approve the deal, but we'll have to see if they will try to get more concessions from Washington, and if they will even be able to negotiate that. Because, of course, in the last couple of months, it has been clear that it has been the United States that has been influencing the direction of the negotiations. And clearly, if we look at the outcome yesterday, it was the United States that was controlling the direction of the deal. And so far, they have come out ahead because of that.
Yeah, well, and there we are in the other parts of the world celebrating the deal, not knowing the details, you know, really doesn't meet up with expectations. But, I mean, as you said, we'll see how the countries on the bloc would react to this, and perhaps they can get more out of this. Thank you so much, Chip, for giving us those details.
Thanks, Ini.
All right, back to Africa. Progress on the $2 billion hydrocracking complex package that forms part of Egypt's sweet oil refinery upgrade project has slowed, with completion now expected in 2026 or early 2027. In July 2023, Egypt's Ministry of Petroleum and Mineral Resources revealed plans to invest $9 billion in new refining and petrochemical projects. The projects, which are currently in the planning or construction phases, expected to help Egypt increase its refining capacity and production of petrochemicals. Over to Niger. That country is seeking Morocco's support in establishing a new national airline as part of a broader transport sector cooperation between the two countries. And in a social media post, the Minister of Transport and Logistics revealed that he had emerged during a high-level meeting in Rabat with Niger's Transport and Civil Aviation Minister, and they expressed interest in drawing on Morocco's expertise in aviation, particularly in the creation of a flag carrier, but also for infrastructure development and regulatory governance. Let's move to Ethiopia now, where Ethiopia's dedicated effort to boost its coffee production and productivity are yielding substantial results, according to the Ministry of Agriculture. The Minister of Agriculture says that coffee's pivotal role for Ethiopia and Africa, describing it not merely as an agricultural commodity, but as a strategic product intrinsically linked to history, identity, and economic development. And he says that there are significant and impressive numbers coming from its production and export. And then we go to South Africa, where South Africa and the African Development Bank have signed $475 million loan agreement, and it's aimed at supporting the implementation of the just energy transition in the continent's biggest carbon emitter. Well, the finance minister said in a release on July 24 that the facility is part of the third development policy operation, which includes participation from the World Bank, KVW Development Bank, Japan International Cooperation Agency, and the Organization of Petroleum Exporting Countries Fund for International Development to support structural reforms to enhance the efficiency, resilience, and sustainability of the country's infrastructure services. The $474.6 million loan follows the first policy loan concluded in 2023 to support South Africa's JET. Well, this agreement highlights the importance of South Africa's partnership with the AFDB. We're still in South Africa, where they could face another jet fuel supply crisis by October unless urgent regulatory reforms are made, according to Fuel Industry Association of South Africa Chief Executive Officer. He was speaking at a Fuels Industry Forum in Johannesburg, and he explains that the scheduled shutdown of the National Petroleum Refiners of South Africa Refinery in Sasolburg, which is the country's last operational oil refinery, combined with outdated customs regulations, could severely disrupt fuel supply to Oral Tambo International Airport and beyond, potentially grounding flights and straining regional fuel distribution in networks. He said the impending crisis was linked to long-standing flaws in the 1964 Customs and Excise Acts. From South Africa to Rwanda, where Rwanda and Tanzania have signed a memorandum of understanding to establish operationalization of Tanzania Ports Authority license office in Kigali, and that's set to boost trade between the two countries. The office is expected to allow Rwandan traders to have their goods cleared without having to travel to Tanzania ports, mainly Dar es Salaam. The two countries also signed another agreement on agricultural cooperation. Both deals were signed at the ministerial session of the 16th Joint Permanent Commission between Rwanda and Tanzania, and that happened in Kigali. And finally, UAE experts sending monthly remittances should not just be looking at how their currencies are faring against the dirham, but you should keep an eye on whether there are other deals available on the remittances fees, because towards the end of each month, UAE currency exchange houses, banks, and remittance platforms are offering discounts on fees, and in some cases even allowing for zero-fee transfer, which is why UAE experts are looking to a handful of choices each time rather than sticking with any one service. Let's find out if Ladi is sending some of those funds. I don't know where he'll be sending it to, but I'm sure if it's without fees, Ladi will be interested.
Yeah. No, who wants to spend all their money sending money? You know, paying about 20% of what you're sending. That's too much money at this point. Money you can use for other things. Yeah. Well, let's look at what's happening in the crypto space now. We're seeing, on the screen there's green, but a deep green color there for Binance token there. That's the native cryptocurrency for the Binance exchange. It's hit a new high, all-time high. I think 2025 is the year of new highs, at this point. According to crypto.news data, today showing that it's hit a new high, up about 7.7%, and that's the token. The rally adds to a strong monthly uptrend, with the token now up more than 12% in the past week, 20% in the last 30 days, and nearly 45% year to date. That's for BNB. Then we see that, meanwhile, that's left to CZ, that's the former manager there of the exchange, his net worth has blown past $75 billion because he holds a lot of tokens, at this point, talking about the BNB token there. And we're also seeing more accumulation of Ethereum, SharpLink. Yeah, most of these companies, before now was about accumulation of Bitcoin, but now we're seeing attention shifting to Ethereum accumulation there. They bought a whole lot of Ethereum. That's talking about this SharpLink company. They're following the footsteps of some other gaming platforms at this point. So Ethereum's been accumulated by most of these companies at this time. All right, let's talk about another issue right now in the cryptocurrency world, and that's with banks now. The likes of JP Morgan are actually allowing customers lend to their crypto holdings at this point. The Financial Times reported that the company is considering providing loans against cryptocurrency holdings, and citing other sources at this point. So that's quite a big deal, looking at that coming from JP Morgan. Let's bring in Attaining now, a crypto evangelist, to bring us up to speed. Great to have you on the show.
It's nice to be here as always.
Yeah, so, talking about JP Morgan, they're allowing customers lend, against their crypto holdings. Talk to me about how banks will adjust their capital models, assets, collateral, especially given, we have Basel's high-risk weightings there. How do you think that will impact, the financial services giants there?
Yeah, I think this latest announcement from JP Morgan is very, very big. And it's not really coincidental because we are seeing a perfect storm of factors. The Trump administration is more crypto-friendly, and there's growing institutional demand. But like you said, there are also some technical complexities, right? It's not just about JP Morgan making the announcement, because as you alluded, under the Basel III regulations, crypto assets carry a punitive 1,250% risk weight, essentially treating them as extremely risky, right? So banks will definitely need to completely rethink their capital allocation models. And the smart play might actually be using Bitcoin ETFs as collateral instead of direct crypto holdings, since ETFs could potentially receive more favorable regulatory treatment. And in terms of pricing, I feel that banks would definitely charge significantly higher interest rates to compensate for this capital burden. So we are likely to be looking at rates of 300 to 500 basis points above traditional asset-backed loans. And banks might also implement dynamic loan-to-value ratio that adjusts in real time. Although we have this kind of thing in the crypto space with decentralized lending platforms like Eve and Compound.
All right, I guess we'll keep tracking to see how everyone plays in this space, seeing that traditional banks are coming in there, even though we have those decentralized platforms offering all of this. So another hot topic now, we're seeing BNB there, that's a native token for Binance Exchange, hitting a new high. 2025, we've been seeing new highs for different asset classes. What do you think is driving BNB?
I would say one of the things that is driving BNB is development, right? One of the biggest launches that BNB has done that has brought a lot of value into its ecosystem is the Binance Alpha. The Binance Alpha is where Binance allows people to get access to early stages, airdrops, or pre-sales directly on their platform. So this is more or less like a centralized exchange integrating decentralized exchange properties. So Binance is literally doing what banks are trying to do to the crypto platforms. So Binance is consolidating internally, and this is affecting the price of BNB as expected. I know that CZ has been released from prison, so everything is just working well for Binance.
All right, we'll keep tracking to see if it continues with price discovery at this point. Thank you so much, Attaining, for bringing us up to speed.
Thank you for having me as always.
All right, so in the NGX All-Share Index, new high, 2025. Gold, new high, 2025. Couple of other asset classes.
Fixed income, not...
Yeah, that's just yield at this point. But it's just new highs. So what does 2026 hold?
Oh, so let's get to the end of 2025, then we will see what...
Then we'll start talking about what to expect.
It might just be a year of stability, finding stability, since we're flying all over.
From new highs in 2025.
Yeah, so, I mean, make all the money you can make now. You may not have the opportunity in 2026.
Hey, that's a big one.
All right, so that's it on the program. Thank you so much for being a part of Business Incorporated. Today it's a new week. We're just starting, so we have 4 more episodes. But I'll see you tonight talking about new highs. Let's see if the NGX will hit a new high at the close of trade today. I'm Mini John Mekwa. Bye-bye.